Welcome to Polaris Live. This is Sarwar Kashmeri, welcoming our viewers from around the world to this series of programs on the United States and China in the world. This program is brought to you live in conjunction with the Foreign Policy Association of New York. Viewers can ask questions by using the chat button on the right-hand side of the screen, and we'll try to get to as many of your questions as we possibly can. As a reminder, PolarisLive.com is a commercial-free, viewer-supported channel. You can help us by subscribing to our YouTube channel and newsletters at Kashmeri.com. We have with us today Professor Flora Huang. She's professor of law and business at Derby Law School in the United Kingdom and the author of the new best-selling book, Stock Connect: A New Normal in Future Global Financial Integration. Dr. Huang specializes in Chinese law, arbitration, international trade, and investment law, has published numerous books and journal articles. She's worked for the Basel Convention in Geneva and the Office of Legal Affairs of the United Nations headquarters in New York. She is also an advisor to the Legatum Institute and serves as the EU chairperson for arbitrations and trade and sustainable development at the European Commission. Welcome to Polaris Live, Professor Flora Huang. Congratulations on your new book. It's good to see you again.
Thank you, Sarwar. Great introduction.
May I ask you, is it possible for the layperson to understand what Stock Connect is, and why is it important for stock transactions with China?
The stock connect, you could just understand from the term stock market, connect, link. So stock connect is somehow the collaboration between the stock exchange, particular from the China stock exchange and the overseas stock exchange. For example, they have 4 existing stock connects. One is the Shanghai to Hong Kong stock connect, and Shenzhen Hong Kong stock connect, China to London stock connect, and the China to Switzerland stock connect. So now they have 4 links. The purpose for this connect, they just open gate for the both side investor. So for Chinese investor, they use this link to buy the overseas stock. Also the same in another way, overseas investor could use this connect to buy the Chinese stock. Also not only for the investor, but also for the companies. The company they could open to list, for example, the British company list on the London Stock Exchange, or Switzerland company that list on the Swiss Stock Exchange. They also could use this connect to sell the share.
So the book that you have just written, Stock Connect: A New Normal and Future Global Financial Integrations, is this book aimed at the specialist market regulators? Can ordinary investors, who try to think about China as an asset, can they read the book and it would make sense to them?
This will not only target for the particular people, because they could for the investor to let you know how to invest the Chinese market, and also for the company how they use the stock connect to attract the pool the investor. Also for the regulators to see because in the book that I use the mechanism or the data to see the different regulator how to work together, how to investigate, and in addition to that, I still have a big chapter to overview the whole world, the UK, EU, US, Middle East, Africa, South Asia, to see what's the different stock connect, the China the model, compare Chinese model to the other mechanisms. Okay. So it could be have a wide implication for other country to whether they could borrow or they could learn from this model to connect with to other stock exchange.
Is Stock Connect, does it replace an existing channel? Why would I want to use, as an investor, Stock Connect versus some of the existing channels?
Indeed, in China, in the previous they call the QFII and the QDII. QFII means the Qualified Foreign Institutional Investor Scheme, and also they have a QDII. QDII Qualified Domestic Institutional Investor Schemes, and they have a different scheme. But all the scheme that the problem that the only one way. Only one way. So it means that if for Chinese investor, if you want to buy the oversized stock, you have
Yes.
to use the scheme, one scheme. And for the international investor, you also use the separate scheme. So it's only one way, but this the stock connect is the for two way. Only one scheme for both sides. So it's some kind of open door for the both. You could purchase at the same time. And also in the previous, only the limit to the institutional investor, some kind of investment bank or something like this is not open for the retail investor. So it's some kind of you and me. And now we have access to buy the share. So it's also we don't need to approval. As long as you qualify, you could directly enter the scheme. So it's not like in the past you need to get a quota, you need to get an approval. So it's more the straightforward and the more the simple way for investor and companies.
Also, then, would it be less expensive? There are money benefits to using Stock Connect versus other channels, Flora?
It means that you could because as long as you qualify, so it means you have to look at your bank account, the security account. If your security account like 500,000 at the moment, the new policy is 500,000, then you could join the stock connect to buy the share. But in the past, even you have a lot of money for the retail the investor, no way, because all these the overseas the only for company, for the institutional investor is not for the retail or the individual investors.
I see. And so it sounds like regulations in China have to approve each connection before it becomes active. And right now, you have, I think, 3 or 4 connections. So first of all, my question is in 2 parts. One, if there was a new connection that was being proposed, both China and the regulatory body in the other country would have to approve it?
Yes. For example, now they have a new link China to the Germany. The new link is in the preparation now, and maybe in the future they have a China to Singapore, China to the US. They have a more link coming. But of course, this is the link that you need to negotiate by the both regulators and also need to approve by them.
But China always has to be one side of the transaction, right? You couldn't have a Stock Connect link that goes Malaysia to the UK, let's say.
Yeah. Stock connect is the China have to starting point from the China to connect to the
Yes.
other jurisdiction. But now because they have some kind of country, they also try to copy. For example, Malaysia, they try to also copy the link between the Malaysia and the Singapore. So you mean that this model could be copied by other jurisdictions?
And who owns it right now, the model?
I read the article. They say the Malaysia and the Singapore they try to build up the link,
Uh-huh. Okay. And
and
so,
but Taiwan also part China. Taiwan also want to copy the link between the Taiwan with the Japan or Taiwan with the Singapore. So you mean you could see economy they also try to copy the link to use it, because this link is quite simple. When I started to add the mechanism, for example, like EU or Middle East or African or South Asia, because most they try to build the common market. If you want to build the common common market. So you mean that you have to make all this the legal compromise. Not
Ah,
only for the market, you have to make a lot of the change in your legal system. But for the stock connect, you just some kind of open the gate and the build some kind of collaboration between the two stock exchange. You don't need to make a lot of the change in your legal system. So that's why for the country, it may be more easy to copy.
okay. And just to make sure I understand the mechanism, if America was to have a stock exchange, let's say with China connection, would there be separate stock connects for the New York Stock Exchange, for NASDAQ, for the American Stock Exchange? Is that how it works?
Yes, they have to build some kind of like because Shanghai and Shenzhen could both together build a link with the New York Stock Exchange, another link with the Nasdaq. Yeah, they each the link. So
Right.
that's why now that we have a different name, like the China London, China Switzerland. So maybe the next one day the China US link.
And what is the approval body in China, Flora, that has to approve it before it can get connected?
That one that because usually you need to the two government, you need have signed some kind of deal
Ah,
agreement. The
ah,
agreement you said, oh, we want to make something to push the financial market. Then the stock exchange to follow the agreement to make some kind of a further agreement to sign agreement. Then you open the link.
so how many stock connects are there now? I know there's the Hong Kong China Stock Connect. How many are there at this point? And what are the ones that are in the process of being considered?
Now they have a four. uh, Shanghai, Hong Kong, Shenzhen, Hong Kong, also Shanghai, Shenzhen together with Shanghai first with London. They call Shanghai, London Stock Connect, but now the Shenzhen also joined with the London.
Wow.
And then the China with the Switzerland. And also the new link, China, Germany, they will open soon.
Wow. That's it's growing pretty rapidly then.
Yeah, you could see only a few years because the first link in the 2014, now only few years, less 10 years, you already have a 4, 5 links.
And uh, and I understand that earlier in the day, the Hong Kong China link had some volume issues. That there was some debugging, whatever the phrase is in the stock. What was happening there, Flora? And
Because when the first link between the Shanghai and Hong Kong this the launch in the 2014, and a lot of the problem, for example, some kind of technical problem, and that they also have a quota. But now that they have a lot of the expansion and the revision, so I just checked the latest data now. From Hong Kong side, the investor you could buy over the 3,000 stocks from China. So that's the represented 50 to 60% on the whole stock listed in Shanghai and Shenzhen. So that's what we mean that the link that you could use, the link that you could buy a lot of nearly cover the more than half the share in the stock in China, and also the same from the China side, they also could access quite a lot of the Hong Kong stock.
wow, that's quite something. So again, if there is to be, let's say, a New York Stock Exchange and China Stock Connect, I just want to get this very clear. Then would the U.S. government, the Chinese government, be involved in negotiating, or would it be simply a New York Stock Exchange and let's say
Um,
the
I think that before your stock exchange, the government, usually the government or the financial regulator, financial commission, you have to have some kind of agreement in principle. Then your stock exchange, then you could have
okay,
open the stock connect. So it's some kind of I think that in China they call the CSIC, and in US they have to the SEC, the both regulator that have
okay.
some kind of agreement. Then the stock exchange will follow this agreement to negotiate.
Okay, so I'm going to take us a little bit away from the topic for a moment, Flora. Just this morning, I was reading that yet another internet entrepreneur in Beijing has kind of disappeared. They don't know why, and so there is unease in the American marketplace. Is how can such well-known entrepreneurs, just disappear for a while? And what does this mean for capital markets and stock exchanges and so on in China? Do you have any thoughts about why China may not be as responsive to this worldwide concern about people just going off and not knowing where they are? So I just thought you might like to talk a little bit about that.
That one that also indeed I also mentioned in my book, the biggest challenge for the capital market integration is the
Ah,
geopolitical tension. Yeah. Um, Even you have opened the gate to let the other investor or company go into a market, but how to restore your market confidence, how to rebuild this the investor confidence, there is quite a lot of the factors there,
right.
it's already the beyond this the capital market factors.
Okay.
But
And
I mean, even like this, because now the Biden and the presidency that they both will meet this month, and I also hope that they both have could make some the progress in
yeah,
the local the relationship between the U.S. and China.
right. And you're talking about the Asia Pacific Economic Group, right? APAC meeting in San
Mm,
Francisco
mm,
late next week, I think it is.
yeah,
Yes, I think everyone is wanting to see some
yeah.
progress there. Have you heard anything from your network whether President Xi Jinping will indeed come to San Francisco? Is there any rumor? What have you heard?
From the news, they say that they will meet, but nobody know.
But nobody really knows until
Yeah,
it
yeah,
happens.
yeah. They just say some kind of expect the both president will meet together. We'll talk about some kind of change the views in the relationship or in the conflicts in the Ukraine, the Russia, Middle East. They will change, but this rumor.
It's
So
rumor.
yeah, I
Yes.
don't have any the official the confirmation, but everybody hope that they could make some progress. They could sign some agreement.
You brought up the Middle East. And so I'd like to ask you, China has made a lot of progress in making Abu Dhabi, the UAE, its center for the financial work that China is doing uh, in the Middle East. Is there any thought being given to a stock market, a stock connect between China and the Middle East countries, like especially Abu Dhabi, the UAE?
Yes. And indeed, why they China to develop the stock connect because they try to find a plan B. That now the New York and the New York Stock Exchange and the Nasdaq Stock Exchange still the top the destination for the Chinese company, and that they have around the 300 company Chinese company list to in the two stock exchange. But because the few years a lot of the delisting, a lot of the some kind of relationship that try to the bank this the Chinese company. So that's why on China side they try to develop another the different rules for the Chinese company and investor. For example, they try to connect the Hong Kong or maybe the next time Singapore to that is the Asia link, and UK and Switzerland that is the Europe, and next that it will be the Middle East. Dubai, Abu Dhabi, the Kuwait, yeah, the Middle East link.
Right. And would one of those countries be the predominant link, or will there, you think, be independent links with these major financial transaction countries?
They don't have some kind of dominant because you could see that each the link they target different, like London or China London they target the UK market, and the Switzerland that is the target the European market. So it means that they don't have really to compete. They don't compete at each other. That each link is some kind of separate.
Okay. And allow me, Dr. Huang, to remind our viewers that polarislive.com is a commercial-free, viewer-supported channel, and you can help us by subscribing to our YouTube channel and newsletters at kashmeri.com. Returning back to Dr. Huang, what are the remaining challenges yet to be overcome by Stock Connect, Flora?
A lot of challenge because you could see this the link is some kind of involve the cross-border jurisdiction. So for whatever for the company or for the investor, you need some time to navigate what happened in other side the market when you buy the overseas stocks, because you have no idea. For example, that for the Hong Kong or for the British investor, you want to buy the Chinese stock, you need to spend the time to find out what is the company and what happened. And for the investor, very difficult. You get this the timely and the accurate information. So they put quite a lot of the risk, and also it also impose quite a lot of challenge in the regulator. And if your regulator, the both side regulator, you already signed this enforcement agreement, so maybe you could just co-work together. But if you don't have this agreement, then you need to push the two regulator to sign some kind of deal to investment to this to investigate this cross border if there any flaw or scandal happen. So and last one, I think that's I mentioned that you also see this the two country this the relationship, because for example, I give example the UK and China the Stock Connect, it was launched in the 2019, but it paused for a while. It paused in the 2020 2021. Nothing happened because it's the Hong Kong the protest they concerned is that one.
I
Yeah.
see.
Yeah,
See.
so you could see. I think that maybe one day the China and the US they have a link, but it also depend on the relationship between the two countries.
Dr. Huang, there's a question from a viewer, and they're asking, can you please ask Professor Huang about her view of the variable interest entity, commonly referred to as VIE, structure used to list underlying Chinese operations on an overseas market? Your view on VIE.
And the VIE, indeed, the VIE for a long time it was some kind of gray hole, because the China they have a bank that is on the ownership that is for the foreign investor to own the technology or some kind of sensitive sector. So that's why for the Chinese company they use the VIE to lease. But the Stock Connect is different. Because it's not about the listing, the company direct listing in have to use the VIE list in US or in other countries. Stock Connect is just some kind of open the gate. Then you could directly to buy the stock from other markets. So and the company, because you don't need to the change, you don't need to the listing for the for example the UK company, you only need to the list in your list in London, that's it. So you don't need to also for the China side, you only need to the list in Shanghai or Shenzhen, that's it. So you don't really need to use this the VIE to have to try to escape this the regulatory bank to list overseas market.
Same viewer has a follow-up question, which I will pick also because I think it's worth posing to you. Does Professor Huang feel that the tightening of policies under Xi Jinping might threaten to undermine the viability of the VIE structure to list Chinese operations on overseas stock exchanges?
For the China side, I think the regulator they try to keep a blind eye on the VIE because this some kind of reality or lot of the company, particularly for the technology company that or they use the VIE. So they for the UIE side they don't really put very strict ban on the VIE, but the VIE the problem is for the investor. And for example, the US the investor, the company, Chinese company, they use the VIE the list in US. And then the no problem for the China side, but the problem is the US investor. If you buy this the stock from the VIE, if this the VIE company they in the some kind of bankruptcy or in the some kind of scandal, so very difficult for you to claim back your loss,
Ah,
and bring the any the law case against this company because the company on the legal side they are not Chinese company. They register the other jurisdiction is not. Nature is a Chinese company, but on the legal side, not Chinese company. So for the investor, you very difficult. You could claim that any your loss. But for the China, but I don't see that any the problem for them. Only they just try to the put or tie the control for the company, but they don't have any the problem.
so this viewer who asked the questions wants me to thank you on behalf of them for answering their questions. So that I will now do is say thank you, Professor Huang, and then question to you from my side: what are the implications of Stock Connect for other global capital markets? Is the software transferable? You've said it is to some extent. And so, what I want to ask you is, what are the implications of Stock Connect for the global markets? And also, when stocks are traded on the New York Stock Exchange, the New York Stock Exchange keeps a fraction of the money for their ongoing to fund their ongoing operations and bureaucracy. Where is the maintenance bureaucracy for Stock Connect? Is it in China? Is it somewhere else? Can you help clarify that?
I think that the Stock Connect just offer another way because each country they try to when you develop at a certain stage you want to the extend, and the Stock Connect is really the offer very good your model for you. You try to the link with other stock exchange, and whatever your in particular for the developing country because like I said earlier, you don't need to the change your law or lotto. You just need to have agreement between the financial regulator, then the stock exchange. You could open the door for the investor. I think that is quite a straightforward, very easy way for a financial regulator. You consider adopt this the model to connect with other stock exchange. But the thing is also when you open the gate for investor or company, you also have to the balance because like the investor, each country, the investor, and is some kind of you have a some kind of amount. For example, you have a 10 million investor, and this the investor whether you want to keep this investor at home only invest your own stock, or you want to open the gate to let them to open the money. If they invest in other stocks properly, they will invest less. For example, less at your domestic stocks. So you need to the balance the money. This the whether is good for the investor or you want to the keep this the profit at home.
Now I'm going to end my questions with this. I speak at a lot of conferences, business conferences, military conferences, and I notice over the years, Flora, that more and more of the younger participants now speak fluent Mandarin, as opposed to some years ago when I used to do this. Are you noticing the same thing, for example, in the UK and other countries that you travel to? Because I think it's a very positive sign, and I just wanted to let you give an opinion on it.
Yes, I could see that now that the UK they have a lot of the Chinese school indeed. nearly each city they have one or maybe more than one the Chinese school, and a lot of people not only the Chinese the immigration the people that send the children to learn the Chinese, they also a lot of the international students learn the Chinese. I think the Chinese is some kind of learning Chinese is some kind of very because it's some kind of very popular in the UK.
Right.
I think also in the European country, because I have some friends in France, in Germany, they also quite a lot of people, they try to learn the Chinese because they want to make a business with China. And I tell you something, that because the last month I went to the Central Asia, and they asked me a lot of the question about the China, because I could see a lot of Chinese company there.
Ah, okay.
Yeah,
That's
Huawei, BYD, a lot.
wow. And I also understand that the major financial commercial centers in the Middle East, the UAE, Abu Dhabi, that they now actually require Mandarin to be taught from the kindergarten level on. You've heard about that too?
Yes, but not all of them. I think maybe for the some kind of some particular school. Yeah, for certain
Okay.
school. Yeah,
So we
Middle East, Central Asia. I really could feel the change in the particular in these a few years. They not only from the government, also from the general the public, they try to know more about the China.
well, you're such a informed interlocutor for us on Polaris Live, and I think you've done a wonderful job of explaining to the lay person how Stock Connect works. And I want to remind our viewers, as we say goodbye to you, that Dr. Huang is the author of Stock Connect, a new normal and future global financial integration. And thank you again for coming on Polaris Live, and we hope to see you back soon.
Thank you, Sarwar.
Well, that's all the time we have today. But I want to remind our viewers from around the world, you've been listening, you've been viewing Polaris Live, that continues to explore the most consequential relationship in the world today of our time, that between China and the United States and its impact in the world. Please join us again in a week for another episode of Polaris Live. And until then, goodbye.